Hi, this is Kerry Artak with Wicked Stocks, bringing you the daily Tesla report for Wednesday, November 15th, 2023. But before I walk you through the charts, as usual, just want to encourage you to please click like if you haven't already, subscribe to the Wicked Stocks YouTube channel, share the content if you would with friends and colleagues, and check out wickedstocks.com, where we offer a full suite of both daily and weekly analytical videos just like this one. Daily analysis in the SPY and the Triple Q, that is the S&P 500 and NASDAQ 100 ETFs. Weekly analysis in the S&P 500 Index, the NASDAQ 100 Index, the Long Bond ETF, the TLT, as well as 2 individual stock picks a week that you never see on YouTube. That is 8 a month that cater to the 3 to 5 week swing trader out to the 3 to 5 month near-term investor. We're always looking for at least 20% moves on those stock picks, and you can check out all of this for no cost for 5 days. We offer a 5-day free trial up front with a wickedstocks.com subscription. So sign up for wickedstocks.com, check it all out. If you don't like what you see within 5 days, you can cancel your subscription at no cost to you whatsoever. On with the charts. One of the charts I want to show you before I jump into Tesla is the Triple Q, the NASDAQ 100 ETF. And that is, I'm tooting my own horn here. This is why I think you should sign up for wickedstocks.com. We had a meaningful buy signal 2 weeks ago in the Triple Q. A week earlier in the SPY, that is the S&P 500 ETF. These have been long-term buy signals that I'm expecting into the first quarter of next year. And they set up very nicely. Obviously, we got follow-through on Tuesday with that inflation data. And so just want to nudge you into becoming a wickedstocks.com member, or at least checking out the 5-day free trial and watching the daily Triple Q and daily SPY report for good daily analysis in both of those markets. Those are very heavily traded ETFs. Actually, they're most actively traded stocks or stock type entities in the world. Very well suited for not only day traders, but also longer term position traders, swing traders, so forth and so on. Let's jump into Tesla's chart. Just a reminder that, yes, a month and a half ago, we did close below a 10-month channel bottom that's well above the market now at 259.91, and we had been anticipating the 179.36 channel bottom as a 1 to 2 month target. But that was rejected just a couple of days ago when we settled above this descending 1/3 speed line. That was based on the July high against the more recent late October low. It had held the highs pretty well last week, and then we closed above it Monday, follow through on Tuesday, and we are still anticipating this narrowing zone of resistance over the next 3 to 5 weeks that is presently between 259.91 and 269.17. So, if you bought those mid 260s, 265 out of the money calls a couple of days ago, bravo, you're already seeing a decent return on them, and this is the 3 to 5 week objective. That 359.91 is that 10-month channel bottom that I show here, rising weekly. In fact, if you were to look at the weekly chart of both, it looks something like this. 259.91, 271.02. Now, this is a weekly chart, and so it looks like we didn't close above the 219.75 speed line, but it's 218.53 on the daily chart, and we did clearly close above it on Monday, setting off that 3 to 5 week buy signal. Now, on the way up, on Tuesday, did we top out at 237.99, this channel top, or did we close above it? We closed above it by a degree, by a hair. But, we close around 237.41, and this is a rising channel top. So we could quite easily, if we have an unchanged open right back below it. I'm a little uncomfortable recommending it as a secondary buy signal. If you did go long on Tuesday's close with the settlement just above the 237.99 channel top, I don't have a big problem with that. Just know that we could quite easily, of course, open right back below it. And if we do, the 230.61 level is in reach. That is very close to Tuesday's low of 230.72. 230.61 is this kind of gap area. We gapped from one day to the next about a month ago, actually. 230.61 can contain intraday selling pressures. And I'm going to say that if we close today below 230.61, you should expect 218.53 by Friday's close. There is, of course, the chance, I don't know what might happen overnight. Why would we open below 230.61? But if we do, open today below 230.61, you should allow 218.53 potentially on an intraday basis. All of the minor points on the way down have been carefully chosen and are well suited for aggressive day traders. An aggressive day trader for me, it's just my simple way of saying those who trade more than once a day. They trade perhaps throughout the day, several times, maybe 10, 15 times a day, scalping several point moves if they can. Now, upside, if we open today above 237.99, and yes, we did close just above this formation on Tuesday. So if we do open above it, that bullish momentum that has played out on Tuesday remains intact, and 246.68 would be in reach today. That is nothing more than a 50% upside retracement from the July high against the more recent October low. This level may well contain daily buying pressures, but I don't want to fall in love with it as a resistance area. I think it's a great area to take some profits if you happen to be long right now above the 237.99 formation, or if we open above 237.99, you might get long at 237.99 or higher, then anticipating 246.68 intraday, and you could take profits at 246.68. In terms of selling, 246.68 short on the short side, I think that's well suited for aggressive day traders, but I wouldn't hold a short position overnight after testing 246.68. I do think that if we close more firmly above this 237.99 channel top, that should actually yield this targeted 3 to 5 week objective in what is now 259.91 to 269.17 within just a couple of weeks, 2 to 3 weeks at the most. So that's the point I would like to make, that we have a 3 to 5 week objective presently in the 259.91 to 69.17 area above 218.53 as outlined at the start of this video. And if we close more firmly today above 237.99, this is likely to be reached within about 2 to 3 weeks, where I might add the 259.91 to 269.17 region, narrowing ever so gradually, can contain buying through December and even perhaps well into January trade. We could come off of here in a meaningful way on a multi-week basis. Once again, let me just say about opening below 237.99, a reminder that 230.61 is in reach today, where we can bottom out on an intraday, possibly daily basis. I'll also say that if we close today below 237.99, that allows overbought conditions to send this market south to 218.53 over the next few days, and that will remain a meaningful support level, able to absorb selling through next week, and above which we maintain a 259.91 to 269.17 3 to 5 week objective. Were we to close back below 218.53 over the next few days, and I don't see it, but if so, then we have a 2 to 3 week objective, not only down to 190.13, but there's also a channel bottom down there on the daily chart at 181.65, and this would be the image that I would hold, closing below 218.53 over the next few days. No good reason to be long Tesla as we move into December trade. Presently, we are expecting this low 260s, upper 260s. If we close back below 218.53, we're no longer anticipating this upper area. If you got long, if you bought the 265 out of the money calls, which is still the play to hold, because this is the image I want to show you for that. If you bought those 265 out of the money calls a couple of days ago, great. But if we close below 218.53, I would recommend not only exiting those out of the money calls, but also perhaps reaching for 180 out of the money puts that don't expire for at least several weeks. I know that's kind of a flip flop, but that's just the way I see it happening. Now, I don't expect this downside scenario. What I am expecting, once again, is holding above 218.53. I think this 259.91 to 269.17 region, narrowing on a daily basis, remains a 3 to 5 week objective. And yes, if we close today above the 237.99 level, now we did close above it on Tuesday. But let's just say, we got 238.13 was Tuesday's high. If we can just close above that 238.13, I think that's the degree that we're really looking for. And then this 3 to 5 week objective at 269.17 is then narrowed to within 2 to 3 weeks. And if you've not bought those out of the money calls yet, if we close, say, above 238.13 on Wednesday, even though they're pricier than they were a couple of days ago, I think they're still a good play. Reaching for the 265 out of the money calls that don't expire. I would still go at least a month out on those right now, even though it looks to me like we just might see them over the next few weeks. I'm going to leave it at that for Wednesday's Tesla Report. Please click like, share, subscribe, and check out wickedstocks.com. I'll be back tomorrow with Thursday's Tesla, and you have a great day.